Ladies and gentlemen, good day and welcome to PDS Ltd Q4 FY24 and FY24 earnings conference call hosted by ENY. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Reena Joseph from PDS Ltd. Thank you, and over to you, ma'am.
Hello everyone. I welcome you all to PDS Ltd Q4 and FY24 earnings call. Today from the management we have Mr. Palak Seth, Executive Vice Chairman, Mr. Sanjay Jain, Group CEO, Mr. Rahul Ahuja, Group CFO, and me, Reena Joseph. Please note that a copy of the presentation is available on the investor section of the website as well as on the stock exchanges. Anything said on this call which reflects the outlook towards future or which has been construed as forward-looking statements must be reviewed in conjunction with the risks that the company faces. The conference call is recorded and transcript along with the audio of the same will be available on the website of the company and the exchanges. And please note that the audio and the conference material is copyrighted material and cannot be copied, broadcasted or attributed to any press media without specific and written consent from the company. With that, I would now like to hand over the call to Mr. Sanjay Jain, Group CEO, for his opening remarks.
Thank you, Reena. A very warm welcome to all of you and thank you again for joining us today. Before we go deeper into our operating and financial performance, let me provide some context regarding the challenges and opportunities we faced in 2023-24. It's been a kind of tough year, significant headwinds, muted demand, high interest costs, geopolitical factors across various parts of the world, impacting the demand. However, your company tried its best to minimize the impact of all of this and had a year wherein while the industry got severely impacted, but we prevented that and only had close to about 2% decline in revenue as compared to previous year. While this could, be continue to be seen as a year of challenges, PDS also saw this as a year of opportunities. So therefore, we felt that this year would be a year wherein we will be preparing ourselves for the next phase of growth. On one hand, as I mentioned, that we successfully, navigated the challenges, but there were opportunities unfolding, and we decided to capitalize on them and started investing into them. And these efforts not only position us for growth in the coming years, but also solidify PDS as a global leader in the fashion value chain. And as I mentioned, it was a tough year, but somewhere in Q3, we could, as a first step, neutralize the declining trend. We almost had a flat quarter, but in the Q4, we had a 25% growth over Q3. And as I am talking to you today, we have a healthy order book of about $585 million, which is almost close to 5,000 crore. And it is a 30% increase over the same period last year. Our aim this year is to maintain the momentum of growth and profitability. Fueling our further growth, we made investment of approximately 100 crores through our P&L. In our company, which is an asset-light company, any investment that we make into future revenues is primarily through P&L, and that is where it aggregated to about 100 crore. Our investor presentation captures a slide on the specific areas where we decided to invest to pursue the opportunities. These are primarily focused on establishing new teams and expanding into new verticals across our business offerings. For an instance, under the leadership of Mark Green, a very senior industry professional who has had a long inning with PVH, which is the house which holds Tommy Hilfiger. He has come on board, and under his overall guidance, we have formed a robust team to drive our North America strategy. We are beginning to see good traction and have already made some headwinds in terms of getting on board with some, very reputed clients like Target, and also now having a visibility of increasing our business manyfold with our existing customer, Walmart. Additionally, recognizing the potential for higher margins, we also partnered with a gentleman, Damien Hopkins in UK, to supplement our brand business. Furthermore, our existing verticals like Poetic Gem, Design Arc, Simple Approach, while they continue to stay focused on furtherance of design-led sourcing business, they are also venturing into brand space. However, it is crucial to note that we remain committed to operating within the established guardrails, including maintaining an asset-light approach, managing inventory risk through pre-sold models, and partnering with credit-worthy customers. I'm mentioning about existing verticals also going the brand journey, then they are carefully trying to leverage the existing network that they have with the retail customers and how in a very calibrated manner they can also supply brands to them. Looking back at our strategic tie-ups in the last 2-3 years, and it gives a proof of concept to why we are pursuing these 100 crore opportunities, whether it is addition of category, addition of geography, or addition of, new service offerings to our existing customers. In fact, we have tried to give in our investor presentation a deeper insight into 3 of our such investments that we have made in the last 2-3 years. One of them was with a gentleman called Eric Liddell. In his previous innings with Lian Feng, he was handling close to 600 million plus of home category business, and we brought him on board, and it took about 2.5 years for the business to be where it has reached today, that it has actually got multiple contracts in the home category, starting from a test order of $16 million to actually sourcing the service contract of $250 million from Asta George. And now this business is looking at, eyeing on the US markets in terms of taking this product offering. So the business is already profitable. Business is already generating a handsome, return on capital employed. Likewise, with a gentleman, Gaurav Pandey, who has earlier in his previous innings with other companies have been successfully dealing with US retailers. He has come on board and has started building the Walmart business. And we are very confident that this business will also be PBT positive in this year, in about 3 years of its journey. Likewise, a third example is the CSS vertical, which is a vertical we have started in Bangladesh and now sourcing as a service for our retail customer, Asta in UK. This business is profitable from day one. It has a gross merchandise value of approximately $210 million, approximately about 1,700 crore. As I said, day one profitable, and it generates a very handsome return on capital employed, which is infinite. There is no capital that gets employed in the business, and the returns are highly value added. So if I summarize, Casa Collective, the home category business, is generating an ROC of about 47% last year, should be doubling up in FY25. PDS Far East, profitable business, at present in ROC of mid-teens, but it's looking good, and CSS as a business is about infinite. So this 100 crore investment that we have done in a business is a gestation wherein it leads to an immediate P&L impact, but as these unfold into their real potential, these are the kind of numbers that is there as a potential. Moving on, we achieved a gross merchandise value of about 15,000 crore during the year, marking a 25% increase over the same year last year. And notably, our sourcing as a service segment experienced remarkable growth with a staggering 240% increase in GMV, totaling to approximately $440 million. That's approximately about 3,600 crore. While we generate service fee from these volumes, we continue to gain a larger share of wallet with the customer and continue to deliver customized solution to meet this evolving needs. Our goal is to foster strategic engagements with key customers and continue to provide tailored solutions to address their specific requirements. We built a robust model which has enabled us to navigate these challenging times, as is reflecting in terms of just about 2% decline and about 25% growth now in Q4 over Q3. And not only we have kind of tried our best to navigate, but we believe now we are on a path of driving our growth and profitability upwards. And at the same time, PDS is poised to make further strategic advancements by increasing its wallet share with existing customers, diversify our service offering, and enhance our capabilities through strategic investments. Now I will hand over to Rahul Ahuja to provide a detailed overview of our financial performance. Over to you, Rahul.
Thanks, Sanjay. Good day off to all on the call today. I will, over the next few minutes, inform you all about the financial performance for the quarter and 12 months ended March 31st, 2024. As Sanjay was just mentioning, we witnessed recovery in the later part of the year. Gross merchandise value increased by 19% to 4,526 crores compared to the previous quarter. The consolidated top line of 3,215 crores was a 25% increase with gross margins of around 20%. While our EBITDA of 124 crores increased by 66% with EBITDA margin increase from 2.9 to 3.8%. However, when we normalize this for our business in gestation phase, our EBITDA translates to 157 crores versus 107 crores in the previous quarter and a margin of 5.1% versus 4.2%. Our interest expenses were largely flat in spite of the increase in top line and increase in the base lending rate, which is SOFR, from 4.9% to 5.3%. Profit after tax increased by 157% to 65 crores with 2% margin versus 1% in the previous quarter. Talking about the full year, our gross merchandise value increased year over year by 25% to 15,048 crores. Our sourcing as a service business delivered around 240% growth in the financial year 24. With a consolidated top line of 10,373 crores, we arrested a decline to a mere 2% in spite of us being 8% lower in the first 9 months of the last financial year. Gross margins continued on the expansion trajectory, with us clocking 20.4% in FY24, an expansion of 360 basis points compared to the last year. Our EBITDA was 402 crores with EBITDA margin of 3.9%. However, when we normalize it for the 100 crore investment in new initiatives, our EBITDA actually was 502 crores. It's important to note that we have pulled through this year with higher EBITDA of 502 crores versus normalized EBITDA of 489 crores in the same period last year. This was achieved despite an early single-digit decline in top line year over year. Similarly, our normalized EBITDA margin expanded from 4.7% last year to 5% this year. PAT amounted to 203 crores with 2% margin. Moving on to our segmental performance, our sourcing segment clocked a top line of 10,080 crores with a gross margin of 18.6% and expansion of 352 basis points. Within sourcing, our design-led sourcing offering achieved a gross margin of 17% and improvement of 179 basis points, while sourcing as a service achieved a growth in top line of 125% with an EBIT margin of 38.5%. Brand management continued its growth trajectory, registering a growth of 96% compared to last year, with gross margin and EBIT margin of 33% and 5% respectively. Our manufacturing operations reported a top line of 597 crores with a gross margin of 38% and improvement of 206 basis points and EBIT of 4%. Turning to our balance sheet, the net debt was 259 crores. However, in spite of the growth in Q4, we have managed to curtail our debt levels to the previous December quarter Despite the industry dynamics, our balance sheet remains robust with strong leverage ratios of net debt to EBITDA at 0.61 and net debt to equity at 0.22. With regards to our working capital days, it decreased to 7 days by the end of the year compared to 9 days in December. Excluding Ted Baker business, our net working capital days stand at 1 day. We are focused on bringing back the net working capital days to early single digits. On the capital employed front, in PDS Ventures and other, the capital employed stands at 254 crores. It is important to note that this includes 36 crores attributable to MTM gain. We are also pleased to announce that we have proposed a dividend of rupees 3.15 per share. We had declared an interim dividend of 1.6 per share in the first half. This makes the total dividend to 4.75 per share for the year, a payout of 43%. In conclusion, the resurgence of demand and the promising performance of our new ventures bolster our confidence in achieving growth in the upcoming quarters, driving steady progress in quarters to come. With this, I request the moderator to open the floor for question and answer. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Prasad from VP Capital. Please go ahead.
Hi, good evening. So, Palak, when we talk about PDS Ventures, we report mark-to-market gains. So, given the background of us thinking in terms of mark-to-market, what is our thought process behind investing in so many companies? And internally, how do we measure our performance over a period of time for these investments?
Yeah. Thank you for the question. So PDS Ventures, was started around 7 years ago as an initiative from PDS Group to look at how the industry was moving forward. There's a lot of discussion around sustainability, circularity, and new material science in our industry. So we were seeing that some of our strategic customers, were like really getting impacted. The business model were getting impacted because of all the regulator pressure coming in and all the activist pressure coming in the West that was questioning the retailers' practices on their environmental footprint. So PDS took a conscious decision that we should be part of the solution going forward, not part of the problem. So the investment we made paid huge dividends by helping us position the company strategically with various customers. So like, Sanjay mentioned, we opened the account with Target US, which is one of the largest retailers in the US, with Walmart US, which is one of the largest retailers in US as well, Ralph Lauren, IKEA. So having this PDS venture investment had a two-pronged impact for PDS. One, we onboarded a lot of new customers who typically are not looking to add any new vendors right now to the supply chain because there are enough vendors around the world. So looking at PDS as an innovation provider, we got our account open, and these 4 or 5 customers alone could be a $500 million business for us in the next 3 to 4 years. And then with the existing customers, it solidified our position because fortunately in the global supply chain, PDS Treasury is the only corporate treasury arm structurally investing in the future on innovation. So, the impact on reputation, the impact on gaining new customers and solidifying our position with existing customers was a very strong outcome from our decision to get into this activity. Now, coming to why so many investments, we've identified around 4 or 5 buckets. One is material science. We are seeing that a lot of when garments go into store, they must come from a sustainable source. So PDS invested in a hub in Portugal to basically invest in a lot of material science innovation technologies. Second is manufacturing process, how to make our manufacturing leaner and more efficient. Third is circularity in fashion. The biggest issue in the West is how millions and millions of tons of clothing are going into landfill. So the PDS is providing solutions to our customers, making sure goods don't go into landfill, become the circular economy. And then finally traceability transfer into your supply chain where now the US retailers are asking about the ginger and cotton issue. So having key investments into these four buckets with businesses and companies coming out of the top universities is really expanding our ecosystem globally as one of the key players where any innovation coming in fashion industry, PDS gets to see it, and then we co-invest with our customers like Walmart, Target, IKEA, Patagonia. So when these people are looking at the innovation, they contact PDS Ventures that can you guys look at it as well with them. And our check size is then small. So companies raising large rounds, our check size is going to be like $100 to $300,000, where the retailer puts in maximum money and the venture capitalist puts even the larger check. But then it makes us strategic with the customer, makes us long-term and differentiates us from the hundreds and thousands of suppliers out there, which no one is able to do this with these retailers the way we do it. I hope I answer your question. Sanjay, you want to answer on the mark-to-market side, please?
No, I think the mark-to-market is just our attempt to mention that this is the amount of gain that has already accrued on these investments. But from a conservative accounting policy, we are still holding this into the balance sheet and not yet taken to P&L. As and when we see an opportune time to disinvest some of these, then that is the time this MTM could potentially get into P&L.
Yeah. And most of the investments we have done, I would say, are gaining in value only because, they've been backed by the right venture capital, right retail partner and PDS. So all these investments have a very strong ecosystem around them of people that will, they are being used for not only from, a seed stage or a lab stage, but also into bulk production with the help of PDS and the retail customers that are backing them, which are some of the largest names around the world.
Right. So you mentioned that we benefit out of our investments, but I understand we are not majority owners of all the investments that we do in our venture fund. So how are we able to use their IP for PDS's benefit?
That's exactly what I meant because, we don't want to be majority for sure. We want to have small investments in various companies because we are co-investing with our customers. So if a retailer's venture capitalist arm, either H&M or Bestseller or Walmart or Target is investing with PDS in these companies, then, these companies to gain traction needs to have a combination of people supporting them to move to the next level, right? So it's important that they are backed by various stakeholders, then they can be moved forward. So if they're raising like a $2 million round, PDS will invest maybe $100,000, $200,000 only, right? But become part of the cap table, but become part of the solution with the retailers to take these investments from, startup stage to the next level based on combining strengths of the ecosystem of people who have invested in these opportunities.
Okay. And the second question that I have is, I remember we were planning to invest a lot of money in the US and then we talked about the QIP that we were supposed to do. But on our balance sheet, we have close to 600 crores and it has been lying on the balance sheet for a long time. I mean, it ranges between 400 to 700 crores over the last 4-5 years. So there are two questions here. We have a lot of money on our balance sheet, so why don't we use it for our investments rather than doing a QIP? That is one. And second, if we are not planning to use the cash, then what is the plan for us for using the cash? I mean, why it is sitting on the balance sheet for so long?
Yeah, Palak,
Yeah.
I think the cash is about 680 crores on 31st March 24, and when we report net debt, we net it off. This is typically the cash that is spread across various legal entities of PDS, and this is also the cash that is pending dividend distribution. What Rahul Ahuja, our CFO, is as a first step trying to do is that one hand, if there is this cash, then there is borrowing on the other side. So can he minimize the borrowing by usage of this cash? So we save interest costs. That is one. We also need to look into the fact that a decent part of this cash is the margin money that we give to banks because we are able to enjoy one day working capital because we factor our receivable on a non-recourse basis. And for setting up these lines, we give margins. So this is cash margin A. This is cash across various entities of PDS, wherein endeavor is to knock it off against the borrowing, so that we can save some interest costs. That is one. And on the QIP that you mentioned, we did take an enabling resolution from the shareholders, and but at the same time, we wanted to have this flexibility of having the requisite approvals in our hand, but at the same time, our pursuit is continuing to be asset light, and at present, we do not, have a very, very sizable opportunity that we feel we need to write a check. We do have many opportunities knocking our door, but there is no pressing need to start raising capital. Enabling resolution helps. And I think somewhere, if in the near future, this resolution is till December, if we feel there is opportune time, and we also are, wanting that this step would also enable us further broad base our investor base by getting some good, institutional investors through this process. So therefore, these are the 1 or 2, 3 reasons in terms of cash being there. And as I said, no pressing need to do a QIP. It's just an enabling resolution.
Yeah, one last question. On slide number, I think 19, we have given revenue breakup for top 10 verticals. So what's the currency that we have used here?
It is USD millions. So I think, thank you for pointing out. We will correct it and upload it again, but it is USD millions.
Okay, thank you so much.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all the participants in the conference, please restrict your questions to 2 per participant. If you have a follow-up question, you can rejoin the queue. The next question is from the line of Deven from Marcellus Investment Managers. Please go ahead.
Yeah, hi. My first question is to Rahul. So Rahul, is there any delay in the factoring arrangement which we were trying with HSBC for Ted Baker?
So there is no delay in the factoring arrangement. HSBC has an approved line with them currently. We are in the process of still, finalizing the integration from what the Ted Baker, erstwhile Ted Baker used to use as their ERP system, which was AX, to SAP. I think another 3 to 4 weeks from now, the testing and all should be over. And the process that is followed by the banks in UK is that they release receivables purchase or factoring only once they do an audit of your systems. That's not a practice that is followed, at least in India. So they want everything to come end to end from the system. So let's say I were to go to them today and give them a list of my receivables, they would want to trace it back to the PO level from the system. Any manual step in between, they don't do factoring. Obviously, the reasons are, they don't want to spend too much time as far as analyzing that data is concerned or any manual touch is concerned. So we are starting our testing phase of the integration in a couple of weeks from now, and that's why I said about 4 weeks from now we should be in a position to invite the bank to do their round of tests, post which they will take their internal approvals to disburse the facility.
Okay, and is there any impact of the restructuring which is going on at Ted Baker level?
Palak, if you could take that and give them an update of the latest at Ted Baker.
Yeah. So ABG is in the process of finding a new retail operator because, PDS just ran the wholesale business, which is more or less stable and the head office. But the UK and the US retail partners, they're trying to replace with some more financially stable companies. So hopefully in the next 1 week, there'll be announcement. We have indication who the UK partner is one of the largest retailers in UK with the, $5 billion turnover, who will be taking over the Ted Baker retail stores. So we are just waiting for them to sign the documents, and the announcement should come shortly. So that will give us PDS a very strong partner on the retail side. who will then invest in the business and more retail stores and concessions and e-commerce.